Many nonprofits are facing financial challenges because of federal funding cuts and termination of contracts. Now the government shutdown is adding to disruptions just as the most popular season for charitable giving gets underway. Sharon Epperson joins us right now with more on your money and upcoming tax changes for donations. Good morning, Sharon.
Good morning, Becky. You know, whether it's providing disaster relief, child care, support for seniors, or other needs in local communities, many nonprofits are concerned about the impact of the government shutdown on their services, and they're looking to private donors for help. Here's what you should know about your charitable contributions this giving season. Tax experts say taking a multi-year approach is prudent because of some major tax law changes that will go into effect next year. For some high earners, starting in 2026, there will be a floor on itemized charitable deductions, only allowing a tax break once donations exceed 0.5% of your adjusted gross income. Also under H.R. 1, the One Big Beautiful Bill Act, deductions for filers in the top 37% income tax bracket will be capped at 35%. So what does this mean? Well, for example, if your adjusted gross income is $1 million, which is in the 37% tax bracket, and you donate $100,000 to charity in 2025, that charitable deduction could save you $37,000. In 2026, a $100,000 gift may only be worth $33,250 under the new legislation. Also starting in 2026, single filers who don't itemize and take the standard deduction will still get an above-the-line deduction on cash gifts of up to $1,000. The limit will be $2,000 for married couples filing jointly. For the 2025 tax year, if you don't itemize on your federal return, you can't take a charitable deduction. So this new provision could encourage more giving, some experts say. For more money-saving strategies, subscribe to my free Money 101 newsletter series. Use the QR code on the screen or sign up at cnbc.com/money101. Becky.
I had no idea they changed and made these issues even more complicated.
Even more complex.
This time around.
Exactly.
The point was they were trying to incentivize giving, incentivize you to give more, but not more, like more than 0.5% if you're above an income, but not. If you give much more, you're going to be penalized?
Yeah, I mean, that's what's going to happen. And so that's why people are encouraging you to look this year at what strategy you can do to make sure that you're maximizing the potential deduction. Of course, you want to give the most that you can to charity and not think about the tax deduction, but people want to know about that. And so bunching your donations or making sure that you're able to give appreciated stock, things that you can do that will allow you to make a contribution now, take the maximum deduction, and then also spread that out over several years, like through a donor-advised fund.
Yeah,
that's what a lot of people are suggesting.
If you don't already have one, what's the strategy you should be taking around?
Well, if you don't already have one, I mean, it's important to look at where you can set one up. There are some companies that will allow you to do one without a minimum contribution. Others, it might be $10,000 or $25,000 that you need to start with for donor-advised fund. But the key there is you want to try to figure out if you can give more than the standard deduction so that you can actually take that charitable contribution and itemize.
And charities right now think that they are likely to get more from this, or they're worried just with the government shutdown that they're not going to have services?
They're just worried. Yeah, they're worried. They want to try to get the money right now. But if you can, you know, depending on your tax situation, if it's not time sensitive, you can wait till January. For those people who don't itemize, they might want to wait.